Good morning, everyone. Thanks so much for hopping on this third webinar of the year, Tap the Untapped, winning more 55 plus clients with reverse and second mortgage solutions. I see a lot of people rolling in, so I'm going to just give it maybe 30 seconds before we get going, just to hear some people. I just need to mute everyone. Cool. So yeah, just to be cautious of everyone's time, I'm gonna get rolling here. Yeah, thanks again. Really appreciate everyone's time. I'm really excited about this webinar. It's a fantastic webinar that Becky and I have put together, loaded with a ton of information for all attendees that are going to be staying. Sorry, can everyone mute themselves?
Hi, Josh. I'm doing fine, thanks. How are you? He- I know it's been a long time. Henry just messaged me, but I was telling him I was
Sorry.
just jumping on a call. I just jumped on a call. Can I call you after I get off this call? I just muted myself.
I just muted her. There you go.
Cool. Thanks. Thank you. Yeah, so this webinar 3 is Tap the Untapped, winning more 55 plus clients with reverse and second mortgages. Action-packed. All attendees who stay until the end, you will be eligible for half of a professional CE credit, which is awesome. So not only are you going to get a ton of information, you're also going to be getting credits towards the licensing. So the session objectives is really understanding the financial reality of 55 plus Canadians. I don't think people really know what that situation looks like and how useful these products are for this demographic. Understanding the reverse mortgage opportunity, obviously understanding the scenario of 55 plus homeowners, talking about a solution to make these people much more comfortable with their stage in life. A lot of myths and facts about the reverse mortgage product. And then we're going to get into when the client needs a little bit more. So, and then obviously we're going to wrap up with case studies for success. I talked to a lot of brokers about seconds behind reverse mortgages, and a lot of them find it difficult to wrap their head around specific use cases or when it makes sense and when it doesn't. So we're going to get into some specifics there, and we'll wrap up with a Q&A period to answer any questions that anyone might have. My co-host on this webinar is the wonderful Becky Miele from Home Equity Bank. Home Equity Bank is the original reverse mortgage product with their chip product. Becky's passionate about supporting the 55 plus market, which is one of the largest and fastest growing demographics in the country. She works closely with mortgage brokers to help them build strong, trusted relationships with clients at this important stage of their life, providing guidance and solutions tailored to their unique financial needs. And I think the key throughout the whole presentation is unique financial needs. So without further ado, thanks so much, Becky, for taking the time to go through this presentation. I'm going to turn the mic over to you.
Hi, guys. Thank you for attending, and Arlen, thank you for the invite. Arlen and I have worked over the last few years together, and we've created this back and forth. I have a client for you, I have a client for you, and he's just got it. Arlen has now recognized the opportunity and where a reverse can help some of his clients. And then, beyond that, again, the situations that might call upon his need with the second mortgage. So just a little bit of background. As Marlon said, we are the original reverse mortgage company. There's a lot of misrepresentation of our product. That's what we're here to talk about today. But I think you'll find in the in the broker world, more and more people are getting into it because the reality is Canadians 55 and plus, there's not enough money going into retirement. and people are looking for other opportunities in order to either help them age with grace or to try and make more money. So that's what I love about my job, is that every file is different and there's so many opportunities. I love it, and that's why I love what I do. So we are a Schedule A bank, and a lot of people don't realize that. Some people believe we're a MIC, but we are a Schedule A bank with the RBCs, TDs, and Scotiabanks of the world. We can lend anywhere in Canada. The only thing that's going to change is that our LTV will change whether we're in a rural or urban location. We were acquired by the Ontario Teachers Pension Plan in 2022. We were the first asset, I believe, that they bought 100% because they see the need that this demographic is really not targeted, and there's going to be a need for them in the future. So we're really happy about that. One of the misrepresentations is that a lot of times the borrower or the clients are coerced to do a reverse mortgage. Every one of our files, everyone has a independent legal advice to make sure that they are of sound mind and that this is actually something they want to do. And we have a no negative equity guarantee. And what that means is, God forbid if the market falls and, you owe us $1 million, but your house is only worth $500,000, we only take what your house sells for. So you're never, it's not like the 2008 CNN watching TV, people walking away from their homes because they owed more than what your house is worth. I always say we live in Canada. We're heavily regulated by FSRA. We're very conservative. We're very aware of reputational risk as well. And we just want to make sure that Canadians feel comfortable and that, ultimately we want them to have equity in their home at the end of the day. So that's what we're here to talk about today. A reverse mortgage is the only product that home equity has. And that's why I believe that we're the best at what we do. We've been doing it for over 40 years. Our back end with this demographic is second to none, and it's just going to continue to grow in the future. Arlen? You want to fast forward the presentation?
Absolutely. I just want to chime in here quick. The no negative equity guarantee is a fantastic thing to talk to for brokers, I think, with like a selling feature for reverse mortgages with CHIP or with home equity banks. Sorry. It's amazing. It actually provides that peace of mind and security to the homeowner. I know that there's a lot of myths out there that you're going to go over later in the presentation, but definitely a big selling feature if I was a mortgage broker. And again, thanks so much for jumping on here. I'm so happy that we're doing this. I think that this is truly, given the market that we're in, one of the biggest opportunities for mortgage brokers right now. So yeah, I'll pass the mic back to you.
No problem. So one of the things I'm going to say a lot today is 55, the number 55. That is the magic number. So what this slide talks about is the amount of households that are going to be entering retirement in the next decade. Over 3 million Canadian households will be entering retirement. If you are not focusing on this demographic on your desk, you're missing out on a huge income generation opportunity. There's not enough money for Canadians going into the retirement, and there's a lot of misrepresentation of that demographic. People are living longer. So when they were preparing for retirement, 30 years ago, they didn't think they were going to live this long. So what's happened is, they're getting now into their 80s. And they're like, what? But we're running out of money. We thought we'd live to 82, but I'm in really good health now. So now where do I go? So this is why I've done more work with financial advisors in the last 2 years, because they're seeing if I can keep my money, my investments in longer and take from this tax-free asset, there's a strategy there that we can work towards. in order to be able to live, comfortably into until we decide to leave our home. More and more Canadians nowadays do not have a pension. 80% of Canadians are not covered, and they will run out of those savings within 5 years. And it's not the way. I not very many people these days have a pension, and those people who do, are very fortunate. But that's not the way it is now. But one of the good things that is happening is that over 41% of Canadians have a home. And because of the real estate market, they've created appreciation within their equity. And this is a source of revenue that they can tap into in their retirement. And, like I said, we've been doing this for over 40 years. We know that this demographic does not want to leave their home. COVID scared the heck out of us. We want to stay in our home as long as possible. We want to, we're comfortable in our surroundings, and this is an opportunity for us to help them do that and help them think about the transition in their life when they need to move forward. Next slide, hon. So again, as we talked about, we all know that once you hit retirement, your lifestyle changes, right? So what can we do to help in that transition going into that fixed income that you have never had to deal with? And this is the financial reality of your life. 37% are covered by pensions, but the rest of Canadians are not. And as I said, the average Canadian, sadly, have less than $200,000 going into retirement when they do decide to retire. That's going to go very quickly. Inflation's just risen so fast, and people haven't had the opportunity to catch up. One of the myths about retirement is people believe that people are enter retirement with no mortgage. And that's simply not the case. Going into retirement, the average age of 65, many have a mortgage of at least $100,000. So that's money that they have to put out that's affecting their cash flow. And that's, a huge misrepresentation because people believe that that they're mortgage free. If they are fortunate to be mortgage free, then there's lots of opportunities we can do there. But the reality is most people are not. And as I said before, the good part is that Canadians do have a home, and they have been able to create some wealth in their equity, and that's what they're able to tap into going into retirement. So, what is a reverse mortgage? A reverse mortgage is nothing more than a secure line of credit against your home. The difference between a secure line of credit and a reverse mortgage is that we are a payment optional program. So I'm going to say that again. We are a payment optional program. People believe that if they don't have to make payments, that there's something wrong with the product, that it's a gimmick. That's just simply not the case. You are allowed to make partial or full interest payments on your reverse mortgage. One time a year, you're allowed to make up to a 10% prepayment penalty or prepayment against your mortgage. However, it's always going to hit that interest first. If you decide to make those payments and, something happens and life happens, you can stop those at any time, but you also don't have to make any payments. And this is where we're a niche product and there's going to be a little bit higher interest rate because we're giving you the ability to not have to make those mortgage payments. But that is the difference between a line of credit and ourselves. Many people, I'll always ask you to, first-time homeowners, if they're, can you go back, Arlen? First-time homeowners, if they're looking to borrow money from their parents, I'll always say to the agent or the broker, where are your clients getting their mortgage or their down payment from? how old are the parents that they're borrowing from? Are they borrowing from their line of credit? Okay, they're 65. Have they retired yet? Because at 65, when they do retire, they're going to have to make interest payments. Will they be able to afford to make those interest payments? Many times they won't, but they're not thinking about it when they're 62, 63, and they're loaning that money. As I said earlier, 55 is the magic age. We will only lend up to 55% of your house's value. And when I say we loan up to 55%, that's when you're like 80 in a urban area. So this is where we are very conservative. We are very, reputational risk is very important to us. If you come to us at 55, we're not going to loan you 55% because you're not going to have any equity at the end of the day. So we're all going to, we're a postal code lender. We're going to take into consideration the market, your age, the value of your home, and that's how we come up with how much we will loan you. All of the money that comes from your home is tax-free. There's no impact to government pensions. Many times people, don't even think about it if they haven't talked with their financial advisor. If you draw from your investments, one, you're losing compound interest, but two, if you're over the age of 65, you could very well affect your pensions and have clawback until the following year. And sometimes people don't remember that. No monthly payments, as I said, are required. And I'm going to tell you, most of our clients do not make payments, but they can if they want to. And then probably the number one biggest misrepresentation is you always maintain ownership of your home. It's exactly the same of doing a traditional mortgage in that your name's on title. And it's exactly the same. So that's, telling people and reminding people is what I'm here to help you guys with. Next slide, please. So some of the common uses for a reverse mortgage. We have a product called Income Advantage, and it's basically on a monthly basis. It's supplementing your income tax-free. So you qualify for a lump sum amount. You can take that lump sum, or you can have it delivered to you on a monthly basis just to top up or supplement your income. Why you would do a refi when your mortgage was coming due. Same thing. You can do a reverse mortgage with a mortgage on your home. What we do is we're just going to consolidate all your secured debt. We want you to have more money at the end of the day. It's all about cash flow. And if it makes sense, we're here to help. I work with, when it says age in place, I work with many, many, many real estate agents. And the best real estate agents, the most successful real estate agents are those who have the relationship with their clients and they're not pushing them to sell their house. What they're doing is they're nurturing the relationship. They're giving them options about staying in their home until they're ready to move. It's preparing their home, getting it ready, making it available to them to live in until they decide to sell their house, providing healthcare to come in, and then, being available to sell that home when they decide to. But it's allowing people to age in place gracefully. And that's why I love working with realtors as well. Living inheritance. This is a great one. I love it. The average age of a new first-time homeowner is 40, over 40. So that means they're not being able to buy a home until they are in their 40s. That is how expensive it is for our children. So doing what's called living inheritance, or you might hear living legacy, it's being able to take money from your home, keeping your investments intact so you can use those for your retirement, but it's taking from your home and giving your children the opportunity to buy a home, and we'll talk about that a little bit later, in a time when they would otherwise be able to do so. We all know the faster you can get in a home and start creating equity, the more, successful and profitable you'll be. And this is a way that you can help that next generation get into the housing market. And then purchases. We have an open product. It's great. I love it. It's called Chip Open. It's similar to a bridging product. I always say to my agents and brokers, just do the math. Do the math. But what it allows people to do is hold on to their home until they decide they're ready to sell it. Or you can even do a chip open when you're selling your home and then using that money to either buy that next home or you know we can blanket a product and where you're taking from your primary and you're taking from that purchase you're buying, and then when you decide to sell that primary, we discharge the entire mortgage and you decide to do whatever it is you want to do with your funds. There's so many cool things in regards to purchases. Many people left the city when COVID was here. They took advantage of the higher real estate market, and then they moved, outside the city. But what's happening is people are wanting to move back into the city because their kids are now having kids. However, you and I both know how difficult it is to get back into the city. But what we can do is that, if you sell for 500 and you want to buy for 600, we can slap that, a small $100 chip on that smaller purchase in order to get them where they want to be. So I love that. So, grandma and grandpa are moving back home. They're moving to help with the grandchildren, and they're able to be where they want to be versus, having to drive 45 minutes away, because it's harder as people age.
That's
Next
exactly what my
slide.
parents did.
Yeah.
My parents lived in Richmond Hill, couldn't do the drive, hour and a half round trip to see their nieces. They had a temper tantrum, didn't want to stay. And then they were like, oh, what a waste of an afternoon. So they moved back into the city to be closer to their grandkids.
Yep. And it's hard because, they sold high and now they're, selling low. But this is a way that, I always say with your agents and with brokers and agents when they're dealing with their referral partners, like for real estate agents, if they're having a tough time right now, like this is an income generation program for them. This is a way for them to get them into where they can be. We always want to be able to move into where we can afford. But, you've worked hard for this money in your home. Like, be where you want to be, right?
Absolutely.
This is just, again, just some more scenarios of where you might use a reverse mortgage. If it makes sense, like if you can borrow at 6.5 and your financial advisors making, 10, 11, 12, like, does that not make sense to make some money on your investments? Like a refi where you need to consolidate. Absolutely. People freak out. I'm sorry, my dog is freaking out. People are freaking out about a 6% interest rate, but yet they're willing to pay 22% on a credit card. Like, how does that make sense? Right. So if you're able to, consolidate all for them, that's something we can do. What people don't realize, and I'm always going to say this to you, at 55 and older, when you're in the bank, you're declined many times strictly on ageism. They're never going to say that, but it's a reality, right? You're not going to do a 30-year AM with someone who's 60. Right? They might have the investments behind them to help them, and there might be some programs, but a lot of cases they're not because it's all about money in and money out. So this is where we can kind of step in, help them refi, and just put more money in their pocket. That's what it comes down to. It's all about cash flow. Real estate investment, if anyone's ever said, they really would like to get into the investment market, or they'd like to buy a rental property, or they'd like to buy a cottage for their family, it's a great opportunity. Instead of draining from your, investments, take from your home first. People don't, it's tax free. So when you enter in all these factors, and we create financial illustrations for financial advisors all the time. It's real numbers. It's real interest rates. In 10 years time, we know exactly how much money they're going to have left, right? So they're able to factor those things in to make the best real estate investment they can. Inheritance, we talked a little bit about that. Death of a spouse, like we understand death is very disruptive. We've been doing this for a long time. So one of the things I love about our company is that we really take, we want both people to be on title. And the reason why we want that again is because we know death is very disruptive and we never want them to have to go through that financial burden that they would have to go to if they had to requalify for to be able to stay in their home. Like that is super like just so difficult. And what I always say to my agents though is people don't like to talk about money. And so, on Thanksgiving or Easter or, the May 24th coming up, when you're having these conversations with your parents or your aunt and uncle, they might look really good when mom and dad are both together. They're both alive, but are they okay if one person passes? They're on a fixed income. So when they're together, yeah, they can do a one vacation a year, they go out for dinner, they go to the movies. But when one person passes, you're losing that income, right? With the same amount of bills. So many times, I'm getting calls from brokers like, Mom just can't handle the bills anymore because, they might have had that line of credit that they just can't keep up. So many times they were okay when there was the two of them, but as soon as it's the one, they're falling into financial need. Gray divorce. I'm not sure if you've ever heard that name. I will never have gray hair, but that's okay. A gray divorce is when you're divorcing in your, later years of life. But again, I love this one as well because, many times people are in situations that they feel like they can't leave. And so, if you haven't worked in 25 years, you haven't had a mortgage in 25 years, this is a way for people to be able to maintain home ownership and get out, right? Many financial advisors are using this strategy where they're keeping, their investments intact or they're being able to, divide them kind of equally. And then what happens with the property is one, you either split them both, so simple math, $1 million, you each get 500. And what you do with that 500, you can do exactly what I said. You can buy that condo for 600. We throw a small chip on that. But you divide evenly, like from your home, and you're able to do whatever it is you do. If someone wants to stay in their home, you pay them out of their house versus taking from your investments. Many people in this generation may have a pension, and I'm not saying they don't have to touch that pension, but instead of taking, 400 from the pension, you may only have to take 100 from the pension. But then you're still able to maintain ownership in a property and stay where you want to be. So it's a really good one in order to kind of keep equalization amongst spouses. Um, we do POAs, more, excuse me, more and more people, sometimes as you age, there's resentment when someone gets sick and they have to go into a home and then the other person is like, how do I afford that home and stay in my home as well? So we do a lot of POAs, being able to hire home care to come in or being able to, pay for that home care for that person to be out. Um, you know, eh, I just love the opportunity of just being able to help both, situations, right? Um, Homes are able to, a person is able to stay in their home and then the other person is able to do what they need to do. So it's an important time and we're able to help them out. Financial assistance, as I talked about earlier, there's not enough money for kids. I apologize. It's a little bit loud here. Um, Financial assistance is huge. People cannot get into the market without the help of their parents or grandparents. I have 4 kids, and they range, over a 10-year period of time. I have one kid who's ready to buy a house, but I've still got a kid in high school, and I have my own mortgage. So how can I possibly, like, I can't help him buy his home. But guess what? My parents can. right? So many people, my parents are 80, they see, kind of how much money they have in the bank, how much money their house is worth. The kids coming up, they're making decisions like, if I help them now, this might be the way, and the joy they feel is great, right? So I love being able to see the grandparents or the parents help their kids get into the housing market. Our chip open product, when we talk about payment struggles, we can be a short-term product. If I lose my job at 55, I still have mortgage payments. So if the numbers have to work, you have to qualify. But if you're fortunate enough that, there's enough equity in your home, it's a way of giving you that reprieve for amount of time, um, that you're not looking at other ways to sell your house, right? It's kind of that transition period before you find another house. I have some friends with mental health issues, being able to offer them that support if you need to quit your job for your own mental stability, you're covered. We've done the calculations based on your value of your home, how much you owe. I love that I'm able to say you're okay. We'll be able to help you. And then we just talked about the decline as well, when you're declined from the bank. So it's we're just always here to help. We are an asset lender. We do look at income, but it's mostly based on the asset of your home. Next slide. Some of the myths I deal with on a day-to-day basis. Clients will lose ownership of the home. Exactly like a normal mortgage, title ownership stays in your borrower's names. So that is complete falsehood. Clients owe more than what their home is worth. So we discussed this at the beginning with Arlen. We have 100% no negative equity guarantee. So what that means is you will never owe more than what your house is worth. We all hope that the market is going to rebound, and it is rebounding. But no, you will never owe more than what your house is worth. Surviving spouse is stuck paying the loan after the homeowner passes. Nope, you are allowed to stay in your home until you decide you want to leave. That is why we put both names on title. We do allow, there's many people who are entrepreneurs and they don't want their name attached to a title, and that's fine. However, when we lend you the money, we're always going to include that person's information, so we know if something does happen down the line that they will still be able to qualify for that mortgage. So we do make allowances for people who do not want to be on title, but we're always going to use their age in order to be able to do that, or to be able to afford to stay in their home. Clients can't get a reverse mortgage if they have an existing mortgage. Nope, you can. Most of, I would probably say 80% of my business is people consolidating debt, right? It's paying off that little bit of mortgage going into retirement, which is going to alleviate some cash flow for them so they are able to live more comfortably. Next. So some of the key considerations for a reverse mortgage. As I said, 55 is the magic number. What that means is you have to be over the age of 55 in order to get a reverse mortgage. If you are 55 and your spouse is 50, you do not qualify for a reverse mortgage. All parties have to be over the age of 55. We are a postal code lender, and our algorithm is based on your age. The older you are, the more money I will lend you. And this has to do with the reputational risk. If you're 55 and you come to us, you can stay in your house until you're 100. For 45 years, you could stay in your house. That's a long time for us to carry that mortgage. And we want that equity to stay within the home. So the older you are, the more money we will lend you. We're always going to do the reverse on the primary resident, or on the primary home. We do blankets. That's one of the differentiators between us and some of the competitors in the market. We allow seconds and we allow blankets, which we can do on rental properties and whatnot, but we're always going to lend first on the primary resident.
Asking them if they are open to settlement or the principal only.
Oh, sorry, someone
We
is,
have only reading.
someone,
So
someone's on the phone. Minimum value of a home that we do is $250,000. So there must be, so the home value must be at least 250,000. And believe it or not, there's places in Canada that you can buy where the house is less than $250,000. I just turned one down in Cambridge, actually, a couple weeks ago. Unfortunately, the woman was buying a condo for $230,000. And then home equity bank, we always have to be in first. We always have to be in first place. So unfortunately, you know, if someone has a really good interest rate, they don't want to give that up. Unfortunately, we have to. Arlen, I see. Did you want to answer any questions as we go through?
We have a Q&A at the end, so I'm just gonna, I see them
Okay.
popping in, so I'll just wait and I'll read them out
Okay.
at the end of the
Perfect.
presentation.
Okay.
Cool. Yeah, so that's all great stuff, Becky. Thanks so much for being thorough. I love the myth page because when I talk to brokers about reverse mortgages, there's always concern. And I think Home Equity Bank being the first reverse mortgage in the market, you guys over time have done a fantastic job alleviating a lot of the stress and covering a lot of the myths that homeowners, 55 plus homeowners have when it comes to reverse mortgages. So, you know, again, the no negative equity guarantee, I think is something that's a fantastic tool with the CHIP product specifically because it would give me and, you know, anyone I know peace of mind that they can live in their house. They take full ownership and no one's going to be knocking on their door to kick them out, regardless of where we are in the housing market. Because if someone's living in their house for 45 years, you know, there's ebbs and flows in the market. So that's great. Thanks so much.
Yeah, of course.
And you know, you mentioned reputational risk, which I think is really important for us to keep as a theme throughout this presentation. And I'm going to focus a little bit about that shortly. But you know, you mentioned being conservative, and you know, it's amazing, obviously, because of the no negative equity guarantee and all the other things that you're offering. Being conservative makes total sense, especially in considering how old these homeowners are. So what happens when there is a reverse mortgage shortfall? You know, this could be when a broker is helping get a client into a reverse mortgage originally for the first time, or you know, they moved and then now they're getting a new reverse mortgage. Or maybe the broker's helping a client who already has an existing reverse mortgage in first position, and they recognize that they've got some debts or there's some family needs, and they're looking to pull out more equity. So what happens when there is a shortfall? You know, usually in those situations, the deal dies flat out. The broker usually turns them down. When I tell people that we can do second mortgages behind CHIP, they're very surprised. They're like, "Oh, I wish I met you a couple weeks ago," because they turned a client down. So usually these deals stop right in their tracks because before there were no options if they couldn't get more money or if there was a shortfall. And that, you know, wasn't I would say it was a disservice to the homeowner who were looking for some cash flow, but because there wasn't enough money to pay out an existing mortgage or the debt, it would really stop dead in their tracks. So Tembo Financial, we do seconds behind Home Equity Bank's CHIP. As Becky mentioned earlier, we've been working together for 2 years now, and we look and make sure that the deal makes sense. But before I get into that stuff, there's a lot of you on here, a lot of familiar faces, a lot of familiar names. But for those of you who don't know me and Tembo Financial, I'm Arlen Eckstein. I'm the VP of Sales and Marketing here at Tembo Financial. We are a direct balance sheet private lender. So we're not a MIC. We don't syndicate any mortgages, and we only administer mortgages for ourselves. It allows us to turn around answers and underwrite within an hour. We can fund very quickly. The biggest thing to highlight here is our creativity, and I think that that's really the key here for this presentation, because we are able to we know where our money is going to be next year and in 2, 3, 4, 5 years, and it allows us to think outside of the box, understand the story of these 55 plus homeowners, and really customize solutions that will help get these 55 plus homeowners where they need to go. And I think that that's the key for this presentation, because we have that flexibility, we have that longevity, we have the consistency of where our money is, and it allows us to understand and underwrite with common sense and understanding where the clients are today, where they're trying to go tomorrow, and then we can customize that solution behind the chip product that will help alleviate, the stress, help with some cash flow, provide funds to pay out debt, provide funds for a parent or a grandparent to pay for a wedding or a down payment on another home. And finally, transparency. It's key for us. Everything that we do stems from fantastic customer service, and we understand your business through and through, both Home Equity Bank and Tembo Financial. So with us, there's no set surprises from origination to payout. Every cost is clearly outlined in the commitment and discussed with brokers. That way you can look like a superhero, you can build that relationship, and you have full confidence moving forward with any of our products to get your clients back on their feet and where they need to go. So how does Tembo help with reverse mortgage shortfalls? So the biggest thing is reputational risk. Becky kept saying it throughout the presentation, and I think that that's key to focus and highlight here. Not only is that really important for Home Equity Bank, but it's extremely important for us. And if you are working with 55 plus homeowners, it should be the core of your business as well, because reputational risk with this demographic is huge. So qualification is key. And because these people are staying in their home, they're looking at age in place, they're looking to free up cash flow. These aren't just quick 6-month solutions in a lot of times. Sometimes there are. And I think it's important to note that if you're talking and working with 55 plus homeowners, there's a very wide spectrum of 55 plus demographic. You can think about on one side, there's 55 plus homeowners. Maybe they're empty nesters. They want to travel the world. They've taken care of their kids. They've paid for university. Their kids are no longer living at their home. And they're looking to travel the world, take some equity out, enjoy their retirement, or maybe work a little bit less and enjoy time with their partner because they've been parents for the last 20 plus years. And then on the wide other end of the spectrum, you've got 80 plus year olds that maybe not in great health, and they want to age in place as long as they possibly can, and use some of their home equity to stay in that home, whether it's in home care or doing some renovations to retrofit their property so they can easily move around their property with mobility issues, stair steppers, walk-in bathtubs, things like that, or just in-home care to age in place and live in that home as long as they possibly can. But the key here is understanding where your clients are today and what their plan is for the future. We are a private lender, and we can customize terms that will provide long-term solutions for your clients. But understanding what their long-term goals are key to decide whether a reverse mortgage, and more specifically a second behind a reverse mortgage, is the right product for your client. Because maybe we can help them today, maybe we can help them tomorrow, but at some point they're going to need to come up with an exit strategy for repayment. So the first step is understanding where your clients are today and what their plans are for tomorrow. What the funds are, questions you can ask are, what are the funds being used for? Is it to pay out debt? Is it to retrofit your house? Is it to pay for a wedding or a second, third, fourth property? Assisting your kids or grandkids to purchase another property? Then asking questions about income and really getting a good understanding of where their income is right now. Are they working? Are they on pension? Are they just getting CPP and OAS from the government? This is the big key is what is the exit strategy? How long are they planning on staying in this home? If it's 20, 30, 40 years, it's likely that a second mortgage isn't behind reverse isn't the right thing with renewal fees and interest only payments. It might not make sense for the client. So understanding thoroughly what this client situation is key before we do anything else. If we are satisfied with those three main questions, and I'm sure we're going to ask some more, there's a lot of nuance with underwriting and understanding the client, but those are the three main questions to start with. So I would write those down when you're first talking to your clients and understanding what those needs are and what their finances look like and what their goals are long term. Then, if it is a doable deal, we love to look at the home equity bank terms. So their commitment, the amortization schedule, because we want to get a very clear understanding. What's the interest rate that they're paying? What will this mortgage look like in 1, 2, 3, 4, 5 years? How much equity are we dealing with? What's the loan to value? What's the age of the client? And obviously, because Home Equity Bank does such a fantastic job at underwriting and underwriting conservatively to make sure that it makes sense for their clients, we like to look at the terms that they're putting forward before we can confidently move forward with any sort of terms and conditions or structuring a second mortgage behind their product. We can, again, because we're a balance sheet private lender, we can customize solutions that fit these clients' plans. In a perfect scenario, we love to do principal and interest payments when it makes sense and the clients can afford it. I like to use the example, and maybe the math on the fly isn't going to make sense, but a broker that's helping a client free up cash flow, maybe they've got a big bank mortgage, one of the 5 banks, they're making $3,500 a month payments. And the clients have been paying these payments for decades and they're fine making those payments, but they want to live more comfortably, free up some cash flow. But they do have income coming in, and we know that they've had these payments consistently with no issues. They get a first mortgage with Home Equity Bank and there's a little shortfall. And maybe our interest only payments are only $1,000 a month or $500 a month, but it's in that client's best interest to pay $1,000 in principal down because we're going to help to maintain that loan to value. Obviously, them paying down debt is going to be much more beneficial at renewal time. We're baking in some flexibility when we can capitalize renewal fees, things like that. And ultimately, over the long period of time, the clients will be paying less interest. So even though in the scenario, we'll make them pay, say, $1,500 or $2,500 total. With the $2,500 example, knowing that they're making $3,500 a month right now, payments to the big banks, we're still freeing up $1,000 a month or $12,000 a year, which for 55 plus homeowners that are on fixed income, that is significant for these couples or individuals that are trying to live out their glory years. So in a perfect world, principal and interest is what we try to do because it's in everyone's best interest. But there are other scenarios where they're on a fixed income, they can't afford bigger payments. And there's some scenarios where prepayment makes sense. There's other scenarios where interest only payments make sense. Similar to Home Equity Bank, we can use blanket mortgages. So again, we can get very creative and understand where these clients are today, where they're trying to go, what assets they own, and just getting the full scope of who these clients are to be able to customize solutions that work for them. So blanket mortgages, we can blanket mortgages to make sense. We've even blanketed their children's properties when there's equity and it makes sense to do so. The children hop on the deal to help give their parents a little bit more runway. Again, we can get very creative regardless of the scenario. There's a lot of nuance and there's a lot of different scenarios that we can work with to make these deals make sense. So I just want to highlight some of these examples here before we move into the Q&A. Just because I know there's a lot of information that's been spoken about. There's a lot of different scenarios for brokers that haven't worked in the reverse mortgage space for a long period of time, or this is really the way that you're getting comfortable and getting your feet wet, I just want to very quickly outline some real life scenarios where Becky and I have worked together to support clients regardless of the scenario. So I put together three successful use cases where we've together been able to support these clients and get them where they need to go. So the first scenario is for solutions for low income clients. So we had a mutual client, John. He was in the he was around 73, 74 years old. He had a mortgage balance on his property of 249,000. Mortgage value is 700,000. So low loan to value, 36% LTV. The goal here was to pay out unsecured debts. The challenge with John was the client was on pension and really couldn't afford monthly payments. So Home Equity Bank, Becky's team approved a reverse mortgage of 238,500, leaving them with a small shortfall, obviously because the mortgage balance was 249,000. Tembo came in, we registered a second mortgage for $100,000. This was, again, going to our creativity, understanding the scenario, what the client situation is. We were able to customize a very creative solution for them. We gave them a second mortgage for $100,000. We advanced only $62K. This was to cover the shortfall, pay out existing debts, and provide a prepaid interest reserve for John. We left $38,000 as a buffer, so we registered this mortgage for hire, did an initial draw of $62,000 at advanced on closing, and then we had that $38,000 buffer to capitalize any renewal fees that were coming up and offer a second year prepayment should John need more time to sell his property. So at the time of renewal, so after 1 year, Home Equity Bank had a balance. It increased to 261,000 and change. However, the loan to value was still under 50% LTV. So we were both safe given the situation. John ended up renewing the mortgage with Tembo, and he ended up selling in year 2. And then Home Equity Bank and Tembo got paid out. So a lot of brokers that I speak to, they're like, what? You can do prepayment? That's going to kill the client. Well, in John's situation, he didn't have a long-term plan to age in place. He just wanted to pay out debts, declutter his property, and then sell when it made sense for him to do so. So the fact that we were able to register the mortgage for hire, provide him funds to cover the shortfall, pay out unsecured debt, and then give him a second year buffer, not knowing whether it made sense for him to sell in year 1 or not, he had that peace of mind to move forward with a first and a second, and we got him to where he needed to go. He paid us out and everyone was happy. Second scenario is when clients need a little bit more. So our client Justin was 68 years old, had a home value of $453,000. Mortgage balance was $170K. Goal was to pay off additional debt. Very low loan to value, 38% LTV. But Justin, in this case, he's fairly young. So being at 38% is in a good position for someone that is in their 60s. Again, the goal was to pay off additional debt. Client was on pension, but Justin also ran a small business, so they could afford monthly payments in this scenario. So Home Equity Bank approved a chip reverse of $196,500. We approved a second mortgage of $35,000. So this was a very small mortgage that we approved. And we helped to pay out any remaining debt that Justin accrued over time. We, as I mentioned earlier, in a perfect world, we encourage principal and interest payments. So this is a fantastic scenario here where the client agreed to pay P&I. So we, at the end of the first mortgage, we brought down the mortgage, the second mortgage down to $27,000 and change after year 1. And then we renewed and capitalized any renewal fees. So there were no additional funds out of Justin's pocket in this scenario. And then at the end of the second term, Justin paid down the mortgage below $20,000. So as you can see, it started at $35K. Even though there were renewal fees, Justin was making his principal and interest payments, and he got it down to $20,000. And despite the reverse mortgage increasing to 225,000, just under 225,000 over a 2-year period, the combined LTV stayed below 55%. And then that broker ended up refinancing the first mortgage, paid out Tembo after the second year, and everyone was happy. So this is a great example, Justin, because he was working, had his own business, whether it was part-time or not. Justin was able to comfortably make principal and interest payments, which was fantastic. And this is a great use case. There's a lot of 55 plus homeowners that want to work, even if they're not working full time and it's just a hobby project for them. Sometimes because, with low small second mortgages, it makes sense to do principal and interest where they can pay them off. In this case, they didn't pay it out entirely, but there are clients that do want to pay out and age in place as long as they can and pay out the second mortgage entirely through principal and interest payments. So this is another fantastic scenario, and I'm sure there's a lot of brokers that run into this situation. So listen up. This is a proactive downsize. So Susan and Steve, they were in their mid-60s. They were empty nesters. They had a home value of $900,000, mortgage balance of $450,000. Their goal was to refinance when the bank said no. So the challenge was they had a bank mortgage that was maturing and the bank wasn't willing to renew because they got into a consumer proposal while they had a first mortgage with the bank. Their plan was, because there were empty nesters, they didn't need this big home anymore. Their goal was to downsize, but they needed to renew this mortgage and pay out the bank. So Home Equity Bank stepped in. They approved a $370,500 chip. Tembo approved a second of $165,000. So as you can see, this is a larger second mortgage than what we approved for Justin in the last scenario. We covered the chip shortfall, paid out debt, and provided funds for a deposit on a new home. For brokers that know us, one of our big products is a deposit loan. So this is a very creative scenario where we were able to help Susan and Steve, not only with a second to pay out the shortfall, but we also kind of sprinkled in money for a deposit. The clients preferred to pay to make P&I payments, which helped keep the combined LTV below 60% LTV. Susan and Steve, they bought a condo, which was perfect for them, sold the subject property and paid off Tembo. And then the broker, Becky mentioned that they can put a small 100,000 or something else on their new property if they're selling for 500 and they're buying for 600 in her example earlier. This is exactly what the broker did. They paid off Tembo, and then the broker applied for a new chip reverse mortgage on their condo. So as you can see, this scenario helped get them out of that sticky situation when their bank mortgage wasn't willing to renew. Home Equity Bank stepped in, Tembo stepped in behind. Not only did we cover the shortfall, but we covered the deposit that Susan and Steve needed for that new property. So I know that we're already kind of over time, but I just want to run through some of these Q&A questions. A lot of them, from what I can see, Becky, are geared towards you. So I'll just start rifling them off and you can answer them. So one broker asked, what happens if you don't renew the clients due to a downward market? What happens with the reverse mortgage?
So with us, you never have to requalify. So once you are in with the reverse mortgage, you're in. So even if the market goes the other way, what it means is we just might not be able to refinance if you need to do so. But otherwise, we take the hit if that happens. But if you never open another email or open up another piece of mail from us, it will just always auto renew until you decide to sell your home.
Awesome. And with us, we're underwriting, given the market, again, understanding the clients, where the clients are trying to go and what the timeline looks like, how much income. That all helps us to establish whether a second mortgage behind a chip makes sense for the client. We're in uncharted territories with the property values now. We haven't seen this in decades, but when we're in uncharted territories, we're underwriting and making sure that it makes sense given the timeline that the clients are looking for to leverage a second mortgage. So there is nuance here, Tanya. But we are underwriting. If the clients are expecting a 3-year term, we're going to underwrite based on a 3-year term. And to the best of our ability, we're going to make our assumptions based on the housing market over a 3-year period. Another broker says, sorry, go ahead.
I'm just going to go through a few of them. Does a reverse mortgage show up on a bureau? I don't believe it does. When you say we look at a home, can you expand as to what exactly, or income? Can you look exactly what we know? People in this demographic are on a fixed income. So, I mean, we will do a reverse mortgage on people who don't even have an income. We just might do what's called a holdback because we want to make sure that property taxes are paid. So, we have a product called the Chip Max product where you have to have a minimum income of 600 credit score. If there's something funny, if there's no income, something shows up on their credit, we may ask for income documents just to confirm. But in most cases, we want to know what they're making on a monthly basis, but we're not going to ask you for income documents unless something wonky shows up. But, for your own best interest, it's always, know your client, right? So you're going to want to know what that income looks like. Can you refinance an existing second mortgage that is currently behind a chip mortgage? Yeah. It just has to make sense, right, Arlen? You have to make sure that it falls within our parameters. 65% is the max we will allow a second behind us. Is this recording available? I am not sure. What is the LTV on a second? Oh, so we just answered that. 65%. Blanketed option. How does this work when someone owns a rental property as well? So what a blanket is we will allow up to 3 properties, sometimes 4 if the scenario works. What that means is the initial mortgage is on the primary, and then we add to it. There is a discount we add as we add each additional property, but what it is it just ends up being an umbrella, and there's one big mortgage covering all the different properties that we have that we're taking equity from. So we will, our credit guidelines allow us up to 3 properties. And that's just to draw equity from each one. I did have a situation where we got the exception to draw from a 4th property. The reason why it was accepted is because the borrower had exceptional credit and all of her ducks were lined up. She had the proper rental, lease agreements, checks to back it up, proper utility bills in line, and it just made sense. As a private lender to the private form ones. So we do not handle the private mortgage. Arlen handles it. You have to sign a private disclosure form separating us from it. We have to agree to Arlen's terms. We take it into very, we allow seconds behind us, but we always want to make sure it's in the client's best interest. So, when you are doing a second, that's when we are going to look a little bit further at their income, what the TDSR looks like, in order to make sure that, does this make sense? Is this going to make the client be put in a worse situation? And one of the reasons why I love working with Arlen is because they've turned down deals, because it just didn't make sense and the clients weren't going to be able to claw themselves out of the situation they were in. So, as a lender, I appreciate the fact that they were looking out for the client's best interest.
Yep, absolutely.
Becky, are you okay with us sharing some of your slide decks on social media? I took a couple screenshots and I think, yes, you can. However, I would prefer you go to tripadvisor.ca. We have a partner launch pad. It is a great resource for agents and brokers. You can sign up for it. It's free. It's free content. It's the verbiage, it's correct verbiage, it's stock footage, email, social media, whatever it is you're looking for. It's called tripadvisor.ca, and it's specifically for brokers. And then you can enter all your information on there and, throw it in Canva and you're good to go. How does your private interact with the negative equity guarantee? What do you renew? So what I would say to that is, the average chip mortgage is about 12 years. Okay, so people technically aren't in a chip for the long term. This is the, latter part of their life. It's a transition period. Um, Ireland is not going to put a second mortgage, and we certainly are not going to allow a second mortgage behind us if it doesn't make sense. So, I've been in this job for almost 5 years. And there's only literally been one situation where we saw like the pair kind of changing. And we were going to be put in a different funnel mix. We are very conservative. We don't want to, we don't want to end up in that negative equity guarantee at the end of the day. In most cases, because of how we handle our situation, we're not. So, in this situation, we probably like there would never be a second allowed if it was going to get to that level. Let me see here. Have to jump. Okay, I have a few questions. What is the rate? Well, the rate depends on where you live. I'm going to tell you that, we're in a competitive market, and we're going to try and match and do everything possible in order to give you the best possible deal. Right now, our rate card online is 6.54, I believe, in an urban center. If you are in a more rural area, it's a little bit more expensive. I believe it's 7.24. But it all gonna, you speak to your BDM, you speak to your agent, and you try and get the best deal for your client. That's what I would say to you. And that's only about what, like 1.5 over a traditional conservative, a conventional mortgage. What I always say when you're talking to the client, if they're so rate sensitive, well, you probably have credit cards that you're holding on to at 22%. We're giving you the opportunity to not have to make payment to put more cash in your pocket. There's a cost associated with doing that. So, as all agents and brokers say, don't focus on the rate, focus on the product. And that's what you need to get across. When you explain second scenario with Tembo, if we to finance after 2 years, what is the point to go with the reverse and second mortgage? Ultimately, most of the time, most of these people need to sell their house, but a lot of times they just are not there yet. So, when there are scenarios where Arlen and I can work together and we can get that second paid off, within a year or two, those are the best scenarios. If you are constantly going to have to, renew, eventually they're just going to have to get out of this mortgage. But sometimes clients have to come to the realization that they need to sell the house on their own, right? So, I'm in a situation right now, the client has a second and she's just getting killed. There's enough money to refinance her to lower the payment on her second. That's going to help her. She's like 88. That's going to help her, give her a few more years. She's able to afford. She's still within our equity, ratios. And it's putting her in a better situation. Should she sell her house? Yes, but rent is super expensive as well.
Yeah.
If paying on the second is cheaper than paying, for a nursing home or paying for a rent, which is the worst of, which is the best situation. So we look at things very carefully. And again, we're always going to do what's best for the client. Sometimes agents have to have hard conversations with their borrowers, like you all know. It's just what's going to be best and kind of getting them to that point. I hope
Yep.
that answers some of your questions.
I was gonna say, you nailed it perfectly, Becky. Like a 1 to 2, maybe a 3-year situation when we're working together with the client is the best scenario. And a lot of these homeowners, they know that they need to sell. They're just not there. We had a scenario where the husband passed away. His basement was used as like a hobby area for him, and the wife wasn't ready to just like throw out decades
Stop.
of the husband's
Yeah.
craft. They wanted to keep all the hobby stuff and go through old boxes and slowly declutter over time. And at the end of the day, obviously there's a cost associated with it, but to many people, being able to move away emotionally from their partner's belongings is worth having, being able to stay in their home and paying for it. So yeah, that you cover that all excellently. And yeah, I mean, we're already over time, Becky. So if anyone has any other questions, feel free to email Becky or myself. Here's all of our contact details. Feel free to call us, email us, send carrier pigeons. We're both here to have to really support your business and help your clients. So if you have specific scenarios, give us a call. Becky and I will be fantastic resources to wrap your head around these scenarios, wrap your head around all the nuance within these reverse mortgages and second behind reverse. Again, at the end of the day, we're looking out for the client's best interest, and we'll be the first people to tell you that this doesn't make sense. And obviously, we're doing our best, but we're not magicians. So there are many scenarios where the clients needed to sell and they needed to sell yesterday. And at the end of the day, understanding what's best for your clients is key into making this whole partnership work. So, a reverse mortgage, a chip reverse mortgage is a fantastic tool. Sometimes your clients need a little bit more, either to pay out debt or through, with paying out a shortfall. And Tembo's here to make it happen. But understanding your clients, where they're trying to go, is key to making it all work. So, yeah, thanks so much for everyone that's still on here. Really appreciate your time, Becky, and all of you brokers. Hope you found it a worthwhile and helpful presentation to wrap your head around reverse mortgages, seconds behind reverse, how they work together. And we both look forward to working with all of you. Have a great day. Take care.
Bye, guys.